Good evening, Doc Severson here for the Theo Night Report for Wednesday, October 18th. I'm cutting this video about 2 hours before the day closes as I'm about to travel. But as we look across the landscape of the market here, whether we look at the Dow Jones or whether we look at the S&P 100 or the S&P 500, one stock kind of sticks out, and this is IBM. If we just look at the index watch of the Dow 30, you can see, up over 9% today. Now, if you think back to our report last week, so this was last Thursday, what I talked about was the Dow getting a little bit heated, right? So we saw how the Dow was getting a little bit heated, and in fact, and I'll show this chart again in a second here, but the fact that rotation was due, and we were going to look at some of these dogs of the Dow and see if there's going to any money that was going to rotate into these. And I think this is the most likely scenario going forward, is the Dow is going to find itself in consolidation, and we're going to see some of these former high flyers rotate into other members of the Dow, as well as I believe the next sector for rotation is going to be tech, and is going to be specifically large cap tech with earnings coming up next week. So again, looking at the Dow itself, this has really reached, even for me, calling this extreme territory is an understatement. So across the board, when we have 3 levels of exhaustion in all time frames, this is where we have a move that has become far too linear. And like I talked about in last night's report, we're seeing this very common S kind of shaped curve here, where we're getting into the runaway market portion of this. Now, just like in a bear market, the largest selling, the strongest selling always comes at the very end of the move, when everybody just can't stand it any longer and just completely, they go out of their mind selling everything that they've got for whatever pennies on the dollar. And this is what happens at the top. The opposite happens at the top of a swing like this. So I'm not calling this the market top forever. I just think that we are going to be overdue for a larger range setting up. But what happens is you get into these runaway market conditions, just like what we had with silver back in 2010, where everybody is convinced that this is the very last rally that we're ever going to see. And this is exacerbated by the fact that most fund managers are still underwater or behind, at least behind the S&P for the year, and they've only got a couple of months left to go. So everybody on board, regardless of all these indicators and overbought, oversold, everything like that, right? It doesn't matter. It's just a momentum play. But at this point, I think we might start seeing some of this rotation, and today was really the first time that we started seeing this rotation, started by IBM. So IBM, look at this, over a 9% move, clearly a downtrend in play. This was clearly a weekly downtrend in play that we talked about last week, and any of these could generate another type of reaction. This is where you get way too many people, way too short, way too late in the pattern, and they've all got to cover at extreme pain. Now, I'm not saying every single one of these is going to do the same thing, but some of the other dogs that we talked about last week were Merck. So Merck is definitely, actually it's doing okay. It's in a pretty good pattern right now, but it's underperforming the rest of the Dow. ExxonMobil, of course, is always a candidate. Everything in the energy sector has been in basically a bear market since 2014. So seeing short covering coming out of ExxonMobil, if they're able to goose their earnings as well too, could be a big move for there. Some of the other ones that we talked about were Nike. I don't know. Everything in retail doesn't look really that great right now, so I don't know whether Nike's going to be able to do it. GE is just getting pounded right now. So GE may at some point actually get kicked out of the Dow if this continues. Verizon is another one that we looked at. Verizon does have a great deal of energy right now, and as we approach earnings on Verizon coming up here shortly, this could also surprise to the upside. And then finally, we have, of the dogs that I talked about last week, Disney. So I don't know if necessarily Disney is going to be able to do much in this environment, especially as we watch Hollywood kind of melt down from the inside out. But look, any of the ones that I just talked about right now are do not look like the Walmarts of the world. So Walmart has just been, everything has just been going berserk lately here. This was stock buybacks. And of course, there's stocks like Boeing. Boeing has just been going absolutely nuts. I mean, this is what we're seeing right now in the Dow. So these are actually, it's funny because I read at the end of 2016, Boeing was considered to be one of the dogs of the Dow. And if you look at this, actually Boeing did nothing from 2014, 2015, and then most of the way through 2016 until we started to get into the fourth quarter. And then it's been on just an epic tear from that point. Once again, it shows that range contraction like this builds up a great deal of energy, leads to range expansion. So watch some of those other dogs on the Dow to see if we have money rotating into them as well, too. This is just a shell game market, right? Once you push something up like this, you take profits in it and you rotate it to something else. So lastly, we have this combined signal, and Don calls this the monsters of tech, right? So this is Facebook, Apple, Microsoft, Google, and Amazon. And so this is a combined symbol, and this one has built up a great deal of energy, at least on the weekly chart, and just enough on the monthly chart to be able to allow this to trend. Now, we are showing exhaustion on the daily chart, but I still think that as we get earnings coming up starting next week into a lot of these stocks, well, it kicks off next week into these, that we'll start to see some of these really start to lift off as well too, if that is meant to be. Otherwise, this could be the catalyst for the eventual correction as we see. So Facebook is actually very similar to this pattern, coming out of a very strong base here. This one actually looks very strong. So that's Facebook. Apple is, Apple is Apple, right? So the uptrend continues, does not look as strong as some of the other ones here with the daily chart exhausted, but again, has done well recently. Hard to see whether or not we're going to get money rotating back into Apple. Amazon was the story of the spring, has gone into an extreme base here, which is actually good longer term because it's built up a lot of energy on the weekly chart as well as some on the monthly. You can see every time Amazon has gotten to this level on the monthly chart, it does spend some time at a larger time frame to build one of these consolidation patterns, and then it's off and running again. So I'd like to see this come up a little bit more, but we do have earnings coming up next week. So by then, it could be ready to go. Also, Microsoft has been just on a tear, just completely on a tear. Again, a lot of energy at the weekly chart, not so much at the monthly chart or the daily chart over here. Earnings are coming up again at the end of next week. And finally, the same thing on Google. Again, Google has got enough energy at the monthly chart, has got a lot on the weekly chart, and then right now it's coming out of exhaustion on the daily chart. But again, we have earnings coming up, so this is ramping into earnings and has got a lot of momentum and a lot of potential behind it. So again, the bottom line here for tonight's report is that a lot of these Dow stocks are really done right now. As we look at the Dow itself, the Dow is really kind of done and should be going into consolidation mode soon. There's a very, very high probability of doing that. But just within the Dow, we could see rotation. We saw that today as an example with IBM. We could also see rotation happen into large cap tech as well too. That is the obvious choice for the next baton toss would be in the direction of large cap tech. That is it for today's report, folks. Thanks for listening. We'll see you tomorrow.